Is the WTI crude oil bull run about to run out of gas? I'm going to take a look at the technical analysis to find out. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. Quick look at the sentiment technical tools then. At the bottom, seasonality coming off a little bit and then flattening out through December before picking up into the new year, so pretty neutral there. And then on to the commitment of traders information. We're going to ignore the red line, which is the large commercial. We're going to look at the black line slightly coming off, which is the large speculators, so they're taking off their bullish bets a bit more, drop below the 90 line, so indicating a possible period of consolidation. Price still trading above the longer term moving averages. So Baker Hughes rig count is still looking bullish, looking at the US line there, +6 from the prior count and +250 from the previous year. So like I said, great tool for gauging sentiment of the industry and all still looking a bit bullish. If you've been following this weekly report, you'll know my thoughts on how to use the inventory numbers, but I'm putting them out there for those that do use them. Last week's worse than expected, 3.291 million versus a forecast of 2.25 million. This week's forecast, 1.9 million. So watch out those Wednesday afternoon numbers. So on to the price data, weekly line chart for WTI. Still bullish, going up through the $80, just pulling back a little bit. I've left the yellow box on there and the previous Fibonacci analysis because I think that's a good guide. We can see that that's the sort of key no man's land zone between 75 and call it 65, maybe even down to $63. That's where the price could pull back to if things sell off. Upwise, $90 maybe if things can restart, and this consolidation or slight pullback is a chance to buy the dip. Who knows, but 90 could be the next level. But downside wise, like I said, into that yellow zone, 75 to 60, and below that then the 61.8% line at $53. Now here's a chart that some of you might not have seen before, and don't confuse the names. This with our line chart from this is a line break chart, Japanese style chart, and I like to use this for finding out buying the dip or reversal levels, purely that. And currently, if you see where the purple line is, that is my marker for the buying the dip opportunity, that turnaround about $83, $84 before looking to go higher. Now I used a 4-block system, 4-bar system to get the trend and a 2-bar reversal, so slightly against the pure rules of line break charts, but I like to use that as a more aggressive approach to getting into these potential turning point type situations. So Heikin Ashi chart, well, our signals at the bottom, both bearish at the moment, but both look like they're warming up to start turning further north and giving us possibly short-term buy signals. Volatility picking up to mid-20s above its longer-term moving average, which could be a good indication of things starting to boil up nicely. Volume trading today under its moving average, longer term one. We can see the 3 days of negative volume above the moving average there, so watch out, see if that can break up on this new volatility action. In terms of price trading currently within the pink box, 2.9 box setup breakout system there, so neutral, pretty much smack bang in the middle of the 2 standard deviation regression trend band analysis as well, so a neutral look there, but that trend slope still looking very positive Could this be a buy the dip opportunity? Interesting to see. Upsides there, you know, like our weekly line chart, $90 looked quite a good upside mark, but starting to warm up to be a bit more bullish after this short-term sell-off. In the shorter term then, using a 50 cents block size for the Renko chart, our signals all down the bottom there, bullish at the moment. Price recovering from that recent sell-off just below the 78.6% line, just around say $79, then pushing back up. It's coming off a bit today, but it's trading within the pink band, so neutral there. It's still above the moving average. Trend still pretty positive. To the upside, you're going to look at $85, then $90.91 as we discussed in the other charts. To the downside, it's looking like a lot of support around $79.80, and then breaks from there. It's $75.76, and looking to cross that longer term moving average line and down to the 38.2% line at $71. But overall, still looking reasonably bullish at the moment. But I suppose a caveat there, it looks like it's just slowing down a little bit, consolidating, waiting for that impetus to move it onwards. So in terms of the technicals, I'm going to stick with last week's opinion as weak bullish. We've seen the sell-off, and has that finished or not? Well, that's what we use the technical analysis to time our way into. I'll be looking for buy the dip opportunities, maybe using that line break chart to target $90, but I'll be wary of any downside moves because oil can be quite volatile when it wants to be. But focusing on the targets, bullish upside 1.6 and 2.6 to 1, pretty similar to the bearish downside, so a symmetrical payoff for you, 1.6 and 3 to 1. But overall, I'm going to stick with a weak bullish outlook. So WTI crude oil in an interesting place at the moment. Fundamentals don't really support it at this high price level in the $80-90 area. But the technicals, they tell us something different. Is this a buy the dip opportunity? Love to hear your thoughts in the comments below. Where do you think it's heading next? Is it, like I said earlier, running out of gas and going to pull back in price, or is it going to push on towards 90, then $100? I say let me know your thoughts. And if you've liked the analysis in today's video and want to learn more, I'll put a link in the description below for you to follow. And if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'll be producing just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.